If you were born before 1966, something happened on January 1st of 2026 that the Social Security Administration is not going to call you about. Your benefit changed, your Medicare premium changed, the rules around overpayments changed, the rules around earnings, around taxes, around survivor benefits, around how the agency even communicates with you. All of it shifted, and the SSA, with the smallest staff it has had since 1967, is not in the business of personally walking you through what any of it means for your specific situation. So today, I'm going to do that. I'm going to break this down by the year you were born, because the rules really are different depending on which group you're in. Find your group, listen carefully to the part that applies to you, and by the end of this video, you'll know exactly what to check, what to fix, and what to do before another month of 2026 passes. Before I get into it, if you're not subscribed to this channel yet, please hit that button right now and turn on the bell. Here's why it actually matters this year. Social Security in 2026 is changing faster than it has in decades. Overpayment recovery rules just shifted again. Medicare premiums jumped almost $18 in a single month. A brand new senior tax deduction quietly came into effect. The Social Security Fairness Act sent out $17 billion in back payments. And the staffing at SSA is the lowest it has been in nearly 60 years, which means longer waits, fewer in-person appointments, and more responsibility on you to know what's true and what's not. What I do on this channel is take every one of those changes and break them down by who they affect and what to actually do about them. Subscribe, turn on the bell, and let's get into it. Group 1. Born between 1943 and 1955. You are between 71 and 83 years old right now. Your full retirement age was 66, and you've been collecting Social Security for years. Most of you assume the file is closed. There's nothing more to look at. That assumption is the single most expensive thing you could do in 2026. Here's what I want you to check. First, the new Medicare Part B premium for 2026 is $202.90 per month. That is up $17.90 from last year, the biggest dollar increase in years, and it comes directly out of your Social Security check before you even see it. So that 2.8% cost of living raise you were promised, around $56 more per month on the average benefit, a big chunk of it just disappeared into Medicare. That's reality, and there's nothing to appeal there. But here is what you can appeal. If your income in 2024 was higher than usual because you sold a house, took a big required minimum distribution, did a Roth conversion, or had any one-time event, Medicare may be charging you what's called an IRMAA surcharge on top of that $202.90. That surcharge can add anywhere from $81 to nearly $487 more per month, every month, all of 2026. And it's based on your 2024 tax return. If your income has dropped since then, file Form SSA 44. Explain the life-changing event, and there's a real chance you get that surcharge reduced or removed entirely. Second thing for this group, widows and widowers, listen closely. The Social Security Fairness Act, signed into law in January of 2025, sent out $17 billion in back payments to over 3.1 million people. If your late spouse worked as a teacher, firefighter, police officer, postal worker, or federal CSRS employee, and their benefit was reduced or eliminated by the old windfall elimination provision or government pension offset rules, that money is owed to you. Some of those payments went out, some did not, and SSA was processing them through 2025. Log into your My Social Security account at ssa.gov and verify your benefit amount and any back payments landed. If they did not, call 1-800-772-1213. Group 2. Born between 1956 and 1959. You are between 67 and 70 years old. This group is in the critical window right now because your full retirement age is different for every single birth year. Born in 1956, your full retirement age was 66 and 4 months. Born in 1957, 66 and 6 months. Born in 1958, 66 and 8 months. Born in 1959, 66 and 10 months. Knowing your exact month matters because if you haven't claimed yet, every single month you wait past your full retirement age earns you another 0.2% in delayed retirement credits, and that compounds to 8% per year for life. Between your full retirement age and 70, you can accumulate up to 24 to 32% more per month forever. On a $2,000 benefit, that's potentially $640 more every single month. Plus, every future cost of living adjustment is calculated on the bigger number. Here is the 2026 specific warning for this group. If you are working in 2026 while collecting before your full retirement age, the earnings test limit is now $24,480 per year. Earn more than that $80 per year. Earn more than that, and SSA withholds $1 for every 2 over. In the year you reach your full retirement age, that limit jumps to $65,160, and the penalty softens to $1 for every 3 over. The good news, that withheld money isn't gone. It gets credited back to your record and increases your monthly benefit once you reach full retirement age. But if nobody tells you the rule, your check appears to shrink with no explanation. So, if you're working and collecting, know your number. Group 3. Born between 1960 and 1965. You are between 60 and 65 years old. For every single one of you, your full retirement age is 67. Not 66, not 66 and something. Exactly 67. And right now, this group is making the most consequential financial decision of your retirement, often without realizing it. If you claim at 62, your benefit is reduced by 30% permanently. On a $2,000 monthly benefit, that's $600 less every month for the rest of your life. Over a 20-year retirement, that's $144,000 less in cumulative income. And here is what the SSA does not warn you about clearly. That 30% reduction does not bounce back at 67. It stays. Only the cost of living adjustments are applied on top, and they're applied to the reduced number. The 2026 specific thing for this group involves Medicare planning. You're now within 5 years of enrolling. If your 2024 income, the year that determines your 2026 IRMAA, was high because of investment gains, a property sale, or a peak earning year, you need to plan now for what your Medicare premiums will look like when you enroll. A single dollar over $109,000 of modified adjusted gross income, single filer, or $218,000, married filing jointly, triggers the full surcharge for that whole tier. There is also a new senior tax deduction of $6,000 per person, $12,000 for a couple, for those 65 and older that took effect in tax year 2025 and runs through 2028. It phases out at higher incomes, but for many of you, it will meaningfully reduce what you owe in federal tax. Talk to a tax professional before the end of 2026, because that window closes in 2028 unless Congress extends it. One more thing that applies to everyone in every group born before 1966. There is a new overpayment recovery rule in effect as of 2026. If the SSA decides at any point that they overpaid you, even years ago, even due to their own error, the default withholding rate is now 50% of your monthly check until the debt is repaid. 50%. So if your benefit is $2,000 per month and SSA claims a $6,000 overpayment from a 2022 calculation error, your check could drop to $1,000 for 6 straight months while they recover it. You have the right to appeal. File Form SSA 561 for reconsideration, Form SSA 632 for a waiver if it wasn't your fault, or Form SSA 634 to request a lower withholding rate. But you must respond within 30 days of the notice to pause collection while they review. If you ignore the letter, the withholding starts automatically. Open every piece of mail from Social Security this year. Do not assume it's junk. So here is the summary by group. If you were born between 1943 and 1955, log into SSA.gov, check whether the Fairness Act back payments landed if you or your late spouse worked in public service, and if your Medicare Part B premium is higher than $203, find out why, and consider filing the SSA 44 appeal. If you were born between 1956 and 1959, know your exact full retirement age down to the month, and if you're still working, calendar the $24,480 earnings limit. If you were born between 1960 and 1965, do not claim at 62 without running the numbers on what a 30% permanent cut costs you over the next 25 years, and look into the new senior tax deduction with your accountant before 2028. And for absolutely everyone, open every letter from SSA the moment it arrives, because the new 50% overpayment rule does not wait for you to notice. Subscribe to the channel, share this video with somebody you know in one of these groups, because frankly, nobody else is going to tell them, and I'll see you in the next one.